Please type AC if audio and video is clear. Just type AC if audio and video is clear. So guys, kindly introduce yourself from where you are attending this session. Mention the name of the bank or organization you are working for. Just two information. From where you are attending, mention the name of the bank or organization you are working. I think it's time for us to get started. If any of you are attending the session here for the first time, just type FT. Any first time attendees here, if any of you are attending for the first time, kindly type FT, first time. And let me also share the screen, my presentation screen. Please confirm whether the screen is visible. Okay. I hope the screen is visible. Yeah, thank you so much. And this is a session we are going to focus on one of the strong, powerful financial analysis tool called fund flow analysis. We are going to focus on this fund flow analysis. Okay, right. There are few first time attendees. You are seeing me on screen. I am CAN Raja, a chartered accountant by qualification, a teacher trainer by passion. I started my career with State Bank of India, where I joined as credit analyst. In very short period, I got elevated as team leader, credit processing cell in mid corporate group. And I should say I got immense exposure. I was able to work on loan proposals starting from 10 crore to 500 crore. I worked for a period of 4 years in which I handled 250 plus projects, which is 5,000 crore plus size. Then I came out of SBI, started my CA practice, had my practice for a period of 7.5 years. During that period, I focused on project finance and debt syndication as my core practicing areas. Then I also used to teach for professional course students on the subjects like financial management, strategic financial management, mainly for the students pursuing professional courses like CA, CMA, CS. I was also invited by banks to conduct training programs. So I've conducted training programs on working capital, term loan, financial analysis, and now I'm also conducting training programs through my own online platform. Thanks to technology, today we have 3 lakh plus learners across 180 plus countries learning banking, credit, and finance. Okay, so this is my background. And my learning portal is CA Raja Classes. So let's jump into discussion. The focus of today's session is fund flow analysis. Fund flow analysis. Whether this fund flow analysis, I mean, when I say fund flow analysis, it means we are going to analyze fund flow statement. Fund flow statement. Whether this fund flow statement is a mandatory financial statement. Whether this fund flow statement is a mandatory financial statement, do any of you have idea about that? If you ask me, the answer is no. This fund flow statement is not a mandatory financial statement. So the mandatory financial statements are basically the statement of P&L, statement of balance sheet, the cash flow statement, the statement of changes in equity, like that, the list goes. Then notes to accounts. Okay, so it goes like this. But this fund flow statement is not a mandatory statement. It used to be a mandatory statement long back. Then it was substituted. Then this fund flow statement was substituted by cash flow statement. Till then, it was a mandatory statement. I believe we had this fund flow statement even in professional financial courses, say like CA, CMA and all. For some or the other reason, it got removed in CA syllabus, but it still continues in CMA syllabus. Okay, let all the stories be there. Okay, let stories be there. For bankers, it is a powerful tool. It is a powerful tool of financial analysis. Whether it is mandatory or not, whether it is included in professional courses or not, bankers are making best use of this fund flow statement. They are taking more informed financial decisions because of this fund flow statement. They are protecting themselves because of this fund flow statement. They are catching the culprits. They are catching the culprits because of the fund flow statement. They are able to understand the financial discipline of the borrowers because of the fund flow statement. They are able to understand the financial strategies of the borrowers because of this fund flow statement. Look, it has got so much of uses, but it was removed from mandatory statement. Number one, it was removed in certain financial courses. But for you guys, let me tell you, this is one of the most powerful statement. This is one of the most powerful statement. Actually, this is one statement where even the knowledgeable, skilled bankers are afraid of. I repeat, even most knowledgeable and skilled bankers will be afraid of when it comes to fund flow statement, because this fund flow statement is like a kind of an X-ray report. It will reveal certain bad things. Okay, certain things that are bad, and it will reveal certain things that are not directly revealed or seen on the face of financial statements. That is, when you look at the P&L, when you look at the balance sheet, you may not know that something is wrong. Okay, but if you prepare the fund flow statement and if you start doing the analysis, it will start revealing them. It will start revealing those bad things. So that's the power of fund flow statement. Actually, when I was working in bank, I just entered the committee room. Okay, so this is the committee room. Just imagine this is the committee room. And here the committee chairman is sitting. And here the committee members are sitting. Okay, this is the committee room. So I had one tough proposal I had to present and get the sanction. So the proposal copies were with all the members and chairman. It was there. So everyone will be going through the proposal document and they will bombard questions. So you have to answer them. And if you are able to answer them convincingly, the proposal is sanctioned. Otherwise, the proposal will get rejected. Okay. So I was carrying one proposal, slightly a notorious proposal, very challenging proposal. And I wrote whatever is the fact and I submitted. So the chairman was here. Chairman took the proposal and I was sitting here. So I was sitting here. At the time I had my team leader. The team leader was sitting here. So the chairman just took the proposal on hand and it almost came flying to me. I mean, it just got airlifted and then it landed and it reached me. It reached me. And then the chairman told, Raja, how dare you are coming up with a proposal where the fund flow shows everything crystal clear. I really admire your audacity, but get lost. This proposal is rejected. Okay. And there one simple tool which created or which enabled the sanctioning authority to reject the proposal was fund flow. That is the power of fund flow. Okay, that is the power of fund flow analysis as well. So I believe you got the picture of what literally happened here. And that's the day I decided, yes, we cannot or we should not take chance with fund flow statement, fund flow analysis, because people at the top, bosses, they are looking into this. They are looking into this. I mean, for us, it can be a technical statement with a lot of technicalities, but the decision makers, they are looking at fund flow statement and they are catching what we were unable to understand. And they are using that analysis for taking a decision. Their decision is either sanction or reject. How powerful it is, right? So That's the real purpose of fund flow statement and fund flow analysis. So with this story, are you really excited to learn about fund flow analysis? I believe I have given the best of the introduction or the teaser for fund flow so far. So far. So are you really excited to learn about fund flow analysis? Yes. If yes, just type excited. Just type excited. Yes. Wonderful. Wonderful. Okay. Now let's move on. So now a question may arise. Why or what is the need for having this fund flow analysis? There is a P&L. There is a P&L, but what is the purpose of P&L? It is to communicate what are the sales, what are the expenses, what are the profits, right? Okay, then a question will arise. There is a balance sheet. Yes, balance sheet is there, but balance sheet role is to communicate the financial position of a business as on a particular date. That is, what are the assets they have, what are the liabilities they have, what is the contribution of the owners. That's it. Then a question may arise. Still, there is a cash flow statement. A cash flow statement is there, but cash flow statement will communicate the cash flow movement based on activities. So the activities are classified as operating activity, investment activity, financing activity. So these three statements are there, but the objective of these three statements are different. And these three statements are not communicating one thing. Okay. These three statements are not talking about how much of funds, how much of funds have come during the year, has come during the year, and how much of the funds have gone out during the year. And these three statements do not talk how much of which funds have come during the year, how much of which funds have come during the year, how much of which funds. So what do I mean by which funds? That is, how much of long-term funds and short-term funds have come during the year. Okay, that is how much of long-term funds and short-term funds have during the year, and how much of that money has been used for long-term use and short-term use. This is not communicated by these existing statements. P&L will not talk about that. Balance sheet will give you only a snapshot as on 31st March. Maybe by looking at balance sheet, you may be able to identify what are the long-term funds, what are the short-term funds. You may be able to identify what are the long-term use, what are the short-term use. But the pathetic part or the problematic part is this is only as at 31st March. This is only as at, let's say, 31st March 2025. You will not know, or you will not know, or you do not know what happened during the year. You will not know what happened during the year. You will just get a snapshot as on 31st March 2025 by looking at the balance sheet. But if you are an investor, if you are a stakeholder like banker, then you should know what happened during the year, not just what happened as at 31st March. Are you all agreeing with me? If you are an investor, if you are a lender, you have to review the financial position, not just year end, not just year end. You should also analyze what happened during the year. What happened for this 1 year full period, 1 year period, not just as at 31st March, right? How many of you are agreeing with this? Agreed? Yes or no? Yes. So balance sheet is not going to communicate that. Then the question is, how will I get this information? If balance sheet is not going to communicate that, for that also answer is you will get it from balance sheet. What nonsense. Just now I said balance sheet is not going to communicate, it is going to give only year end. Then I'm saying you need one full year information. For that also answer lies in balance sheet only. It's simple. You just have to compare the current year end balance sheet, okay? Current year end balance sheet with previous year end balance sheet. So if you are going to compare the current year end balance sheet with the previous year end balance sheet, automatically you will be able to understand the change that happened in this 1 year period. And if you start capturing that change and if you put that in a systematic order in the format of fund flow statement, then easily you will be able to prepare the fund flow statement as well. Okay, so let me give you a picture. Let me give you a picture. Look at this standalone balance sheet I'm going to give you. Look at this standalone balance sheet. They have share capital. They have share capital of, let's say, 100 crore. 100 crore. Okay. They have reserves and surplus of 150 crore. They have term loan of, let's say, 50 crore. Or say, let's say it's 250 crore. They have term loan of 250 crore. They have cash credit of 150 crore. They have sundry creditors of 100 crore. Okay. So now the total works out to 750 crore. 750. It means on the asset side also, obviously, they will be having 750 crore only. Okay. Now let's see what is the total of the 750 crore. They have invested in land. They've invested in building. They've invested in plant and machinery. They have invested in inventory. They have invested in receivables. Okay. And they have some other current assets. They have some other current assets. So let's get the breakup of it. Let's get the breakup. The land is around 50 crore. Building is around 100 crore. Plant and machinery is around 200 crore. So what is the overall position now? It's around 350 crore. Okay. And on the inventory, what they have spent is 150 crore. Okay. And on the receivable, what they have spent is 200 crore. Other current asset is 50 crore. Is it totaling to 750? Can someone confirm? 50 plus 100 plus 200 plus 150 plus 250. Yeah, this is totaling to 750 crore. Now, this is the position as at 31st March 25. This is the position as at 31st March 25. Now, if you look at this balance sheet, what is the conclusion possible for you? They have 750 crore funds. This 750 crore funds has been raised from 5 sources. Owners have contributed 250 crore. They've taken a term loan of 250 crore and they have short-term credit of 250 crore. And they have used these funds for acquiring land of 50 crore, investing in building 100 crore, plant and machinery 200 crore, and investing in current assets of 750 crore. Okay, so this is going to communicate only the position as at what? 31st March. You may not be able to make out anything or significantly by looking at this. But if you have some more additional information, you will be able to really make some deeper analysis into this. What is it, some more additional information? Let's say if you have the previous year information, that is as at 31st March 2024. Let's see what was their capital. Their capital was only 50 crore. Okay. Their reserves and surplus is 110 crore. Term loan was around 180 crore only. Okay. Cash credit was at around 100 crore. Sundry creditors was around 70 crore. Okay. Now if you total and see, let's see what is the total. It is 50 plus 110 plus 180 plus 100 plus 70. So the total was around 510 crore. For a simplicity purpose, I'll make this as 60 crore. So the total will become 500 crore. Okay. It means on the asset side also in the previous year, they had 500 crore. So what was that 500 crore? Let's try to understand. Okay. Let's say in the previous year, their investment in buildings is only around 30 crore. Their investment in building is only around 30 crore. Okay. And their investment in land was only around 10 crore. Okay. And investment in plant and machinery. Investment in plant and machinery is around 180 crore. 180 crore. So this itself now makes how much? 180 plus 40, 220 crore. It means minus 500 crore is the breakup of current asset. Breakup of current asset, which is around 280 crore. So let's say this is around 30 crore. This is around 30 crore. So 280 minus 30, you get 250 crore. And that 250 crore, we'll put it like this. It was like 100 crore, 150 crore. Okay, so let me just check the arithmetical part. It is 10 crore of land plus 30 crore of building plus 180 crore of plant and machinery plus 100 crore of inventory plus 150 crore of receivable and 30 crore of other current asset. Okay, now you have previous 2 years information. Previous year information and current year information. You have 2 years information. So now with this 2 year information, you will be really able to understand what happened in this company in this 1 year period, how the funds have come and how those funds have been used. You will be able to understand by doing a simple comparison. How is that possible? Let's see. What is the land they have purchased during the year? How much they have invested in land during the year? Please answer. How much they have invested in land during the year? They have invested 40 crore in the land during the year. So you get to know that in this year only they have added the 40 crore. If you are just going to have a look at 31st March balance sheet, you believe that they have 50 crore worth of asset and you never know when they have purchased this 50 crore of asset. But now because of this comparison, you get to know that this 40 crore got added to the fold only in the current year. It was not there for a very long time. Okay, that is a useful information for you. And look at the building. What is the investment they have made in building during the year? What is the investment they have made in building during the year? From 30, it got increased to 100. It means there is an investment of 70 crore. Look at the plant and machinery. What is the investment they have made during the year? The total investment what they have made during the year is 20 crore. Also see what is the investments happening in inventory. From 100 to 150, it has increased by 50 crore, right? Receivables increased by another 50 crore. Other current asset increased from 30 to 50, it has increased by 20 crore. So this is the change. This is the change in asset that have happened during the year. That has happened during the year. Okay. Similarly, let us also see what are the changes that have happened in sources of funds also. Sources of funds. Tell me, what is the change in the capital? How much capital has come inside this company during the year? How much capital? From 50, capital increase to 100. It means there is a fresh capital of 50 crore, right? Okay. How much profit got retained during the year? Previous year, the reserves and surplus is 110 crore. Current year, it is 150 crore. So how much profits got added? It is another 40 crore. So another 40 crore of profits got retained. Okay. Then look at the term loan. Previous year term loan position is 180 crore. Current year it is 250. So term loan of 70 crore got added during the year. Look at the cash credit. Previous year it was 100 crore. Current year it is 150 crore. What is the increase? What is the increase in cash credit? It is around 50 crore. It is around 50 crore. And what is the change that happened in sundry creditors? It increased from 60 crore to 100 crore. It increased from 60 crore to 100 crore. That is, it increased by 40 crore. So this is the change that happened in sources of finance. Okay. The uses of finance already we have covered. This is the change that happened in sources of finance. Now, let me keep this 2 years information aside. Let me keep this 2 years information aside. I'll do one thing. I'll copy this page. And let me just focus on the changes that have happened. Okay. So for that purpose, allow me to do this. Yeah, let me just resize it. Okay. Yeah. Let this be here. Now let us just focus on the changes that happened. Look, this is the change that happened. This is how the money has flowed in, and this is how the money has been used, right? Yes or no? The money has flowed in. How much money has flowed in? Okay, let me put it in a form of a statement. Let me put it in a form of a statement. How much money has flowed in here? It has flowed in because of share capital. How much? We got it 50 crore. 50 crore capital has come. How much money had come in because of retained profits? Keep answering. How much money has come in because of retained profits? It is 40 crore. It is 40 crore. Okay. How much money has come because of term loan? It is 70 crore. How much money has come in because of cash credit? 50 crore. How much money has come in because of sundry creditors? It is 40 crore. Right? So the money that has come in during the year is how much? What is the total money that has come in during the year? What is the total money that has flowed in during the year? It is 250 crore. 250 crore. It has come from share capital, retained profits, term loan, cash credit, and sundry creditors. Okay. So this is how the money flowed in during the year. And this information is absolutely not visible in the balance sheet. Yes or no? Because if you are going to look at the latest balance sheet, what you see? 100 crore, 150 crore. But what actually happened? It is 50 crore and 40 crore. If you are going to look at the term loan, it is 250 crore. But what actually flowed in during the year is 70 crore. If you are going to look at the CC and sundry creditor, it is 150 and 100. But what literally flowed in during the year is only 50 and 40. So you get to know how the funds have flowed in. So this is the total sources. And you will also get to know how these funds have been used. Yes, look at here. Funds have been used for investment in land. It has been used for investment in land. What is the total investment? It is 40 crore. It is 40 crore. It has been used for investment in building. What is the investment they have made in building? What is the investment they have made in building? It is 70 crore. It has been used for making investment in plant and machinery. So what is the investment they have made in plant and machinery? It is 20 crore. It has been used for making investment in inventory also. What is the investments they have made in inventory? It is 50 crore. What is the investment they have made in receivables? That is another 50 crore. Receivables, that is another 50 crore. Okay. And on the other current asset also they have invested, which is 20 crore. Okay. So now if you total this, here also you will get 250 crore since you got 250 crore here. So now you literally see the waterfall. Let me tell you, you are literally seeing the waterfall because the money flowed into this company during the year through share capital, retained profits, term loan, sundry creditors, and it became like a dam. Okay. So imagine this is the dam. This is the dam, and these are all the shutters. These are all the shutters. So this 250 crore has actually flown for land, flown for building, it flown for plant and machinery, it flowed for inventory, it flowed for receivables, it flowed for other current asset. Are you getting the picture of it? Are you getting the waterfall picture or not waterfall or dam, water flow, whatever? So money came into the company, it got, I mean, say like a water catchment area, no, we call it as water catchment area. So the catchment water level is like 250 crore and that had flown for various purposes. So this statement is communicating this beautifully. But this is just giving you the flow. This is just giving you the flow. It is not enabling any further analysis. You just know 250 crore had come, and you know that the 250 crore has been fully utilized. 250 crore has been fully utilized. What analysis is happening here? No analysis. It is only a flow of funds. If you want to really do some analysis, you have to slightly alter the structure. You have to slightly alter the structure. What alteration? Let's see. Let me just clear this. Okay, listen. Here, funds have come from multiple sources and funds have been used for multiple uses. What we have done is we have put all the eggs into one basket. Yes or no? We have put all the eggs into one basket. We have put all the funds together and we are saying 250 crore had come. And we are saying all the funds has been utilized and we are saying 250 crore. But that's not the right approach if you want to really do an effective fund flow analysis. So what you have to do is you have to identify the sources of funds based on the timing or based on the duration. So what do I mean by this? You have to identify the funds as whether they are coming from long-term sources or they are coming from short-term sources. Somebody even called me that I'm a speaker, I'm a finance coach who talks a lot about long-term and short-term fund utilization. But I believe this is the ultimate. This is the ultimate. If this is managed, financial management is taken care. If you don't understand this, if you make a mess, then financial management is messed up. It becomes financial mismanagement. Okay, so that's the reason I always put my focus on this. That is, whatever the funds that have come into the business that got to be identified as long-term funds and short-term funds. So what is long-term funds? These are all the funds which have come from source where the repayment can happen after 1 year. Okay, so there is no compulsion. The repayment should happen within 1 year. Whereas short-term funds are those funds where repayments are supposed to happen within a period of 1 year, let's say from the date of balance sheet or from the date of borrowing. Okay, so look at here. Long-term funds are those funds where the repayments can happen after 1 year, and short-term funds are those funds where the repayments are supposed to happen within a period of 1 year. Now, this statement is in very blunt format. It is not facilitating any analysis. So to facilitate analysis, what we have to do, we have to classify the sources of funds as long-term and short-term. Whoever have attended today's morning session, they will be able to answer this very easily. Tell me, the sundry creditors fund 40 crore which had come in during the year, which has to be repaid within like 30, 60, 90 days. Is it short-term source of money or long-term source of money? This is short-term source of money. Okay. Tell me, the capital which has come from the owners, which are repayable to the owners only in the event of winding up of the company, is it short-term or long-term? It is long-term source of money. Okay. Now tell me, the cash credit given by the bank, which is repayable on demand or it is annually renewable, is it short-term or long-term? Is it short-term or long-term? This is short-term in nature. Then tell me, the retained profits, the profits made by the business which are reinvested in the business, is it short-term or long-term? They are long-term in nature. And term loan, as the name itself says, it has got a term. It has got a long-term. Term loans are generally long-term loans, like 3 to 5 years or above 5 years, like that. Okay. But if it is above 1 year, then itself it will satisfy the definition of long-term. So the term loan is also long-term. Okay, now look what we have done. The statement what we have prepared where we have put all the eggs into single basket now just got divided into two baskets. One is long-term source of money. The other one is short-term source of money. I repeat, one is long-term source of money. The other one is short-term source of money. Now, let us also see how the uses were made. This 250 crore has been used for various purposes, right? Let's see whether they have been used for long-term use or short-term use. Simple. I'm investing 40 crore in purchasing land. I don't have any intention to sell the land. I'm planning to use the land for my business purposes. Is it a long-term or short-term? This is a long-term use. This is a long-term use. Okay. I have invested this money in some deposits, in bank deposits. Okay. I will liquidate it whenever I want, which is sitting under other current asset. Okay. I have invested 20 crore in some bank deposits, not a long-term deposit, but some short-term securities or short-term deposits. You will call it as a long-term use or short-term use. We will call this as short-term use. We will call this as short-term use. Okay, I'm going to invest this money in constructing a building where I will either have a factory or office premises, and I'm going to use it for a longer period of time. Is it a long-term use or short-term use? Is this a long-term or short-term use? This is a long-term use. Okay, this is a long-term use. I am investing that money in inventory, that is purchasing raw material, so I can convert that as finished goods. I can sell it in the market and get the cash in 30 days, 60 days, 90 days. Is it a long term or short term? This is a short term use. This is a short term use. I am going to invest that money in purchasing plant and machinery, and this plant and machinery will have a useful life of 5 to 8 years. Is it a long term or short term? It is a long term use. It is a long term use. Okay. I still have another 50 crore. I'm using this money to give credit to the customers who will pay me eventually in 30 days, 60 days, 90 days. Then that 50 crore, the final usage, is it a long term use or short term use? This one, this receivables, 50 crore. I will convert this into cash in 30, 60, 90 days. This is a short-term use. This is a short-term use. So understand one thing. We have classified the uses itself into long-term uses. We have classified the sources as long-term sources. And on the usage side, if you see, we have classified the uses also as short-term uses, and correspondingly, we also have short-term sources. Correspondingly, we also have short-term sources. I think the structure of this statement has to undergo a change based on the timing of the source and use. How many of you agree with me? If you're agreeing, just type agreed. Here, this is a blunt format. We should ideally change the format so it will make more sense. It will make more sense. So what we will do, we will take the long-term source. Okay. We will take long-term source and we will put them here. These are all long-term sources, right? So what is the total long-term source? Can somebody tell me what is the total long-term source? It makes the total long-term source as 160 crore. Okay. Now let me compare the long-term source with the long-term uses. So look at here, these are all the long-term uses I can see. Let me copy this and place that here. So these are all the long-term uses. And if you see the long-term use total, okay, I'll do one thing. I'll put this total over here. The total is 160 crore. Okay. And I'll put this total over here. 40 plus 70 is 110 and 20 is, so it is 130 crore. Okay. So the long-term sources total is 160 crore and long-term users total is 130 crore. So let me write that here. Long-term sources, this, and long-term users is this. The sources is 160 crore, users is 130 crore. It means on the long-term front, you have surplus or deficit. On the long-term front, you have surplus or deficit. The long-term source is 160 crore, whereas usage is only 130 crore. It means what you have is long-term surplus, and that is 30 crore. That is 30 crore. So now by looking at this statement, what you can understand or what you can appreciate is this business has raised long-term funds of 160 crore, And out of that 160, they have spent only 130 crore and they still have 30 crore left with them. Okay, that is the understanding you are getting, right? Do you think you will get this understanding just by looking at this balance sheet? Do you think you will get this understanding just by looking at this balance sheet? Yes or no? Maybe yes, only when you prepare the statement. Otherwise, no. Otherwise, no, right? But this statement beautifully shows you that long-term funds that have come in as 160 crore, long-term use is 130 crore, and they have surplus of 30 crore. So now the question will arise, hey, what they did with this surplus? Where is that money? Where is that money? And for that answer is going to lie in the statement itself because we have not completed the statement yet. Yes, we have not completed. Why? Because we have not yet factored the short-term sources and uses. Yes or no? Look, they have short-term sources of so much. What is their short-term sources? What is their short-term sources? Let us bring that here. This is their short-term source. This is their short-term source. So I'll do one thing. I'll just put one line and close this for the moment. Yeah. What is their short-term source? It is 50 plus 40 and it is 90 crore. It is 90 crore. Okay. And let us also look at their short-term use. Look, they have short-term use over here. This is their short-term use. And let me put that over here. Okay. So here we have the short-term use. Their short-term uses, let me put that in bracket to understand it is a usage. Okay. Their short-term use is actually 50 plus 50, 100 plus 20, 120 crore. 120 crore. So the source is 90 crore. Okay. The use is 120 crore. It means on the short-term front, they have a surplus or deficit. On the short-term front, they have a surplus or deficit. Please tell me. On the short-term front, they have a deficit. Now, for a fair presentation, what I'll do, I'll just bring this 90 crore over here. Okay. I'll just bring this 90 crore over here. You will understand why I have done that. See, look, they have 90 crore. Now, using this 90 crore, this 120 crore, whether that spending is possible, it is not possible. So you have to recognize that from 90, 50 is paid off, another 50 is paid off, another 20 is paid off. It is not possible. So you will conclude that 90 minus 120, there is a deficit. There is a deficit. There is a deficit and we call it as what? Short-term deficit. Short-term deficit. How much is that? We know 90 is the source and usage is how much? Usage is 120. Usage is 120. So 90 is the source. Usage is 120. 90 minus 120. You have a short-term deficit of 30 crore. Yes or no? Yes or no? Okay. Now look at this beautiful statement. This statement shows they had a long-term surplus of 30 crore. You are asking where that 30 crore went. That 30 crore went to support this shortage. Is this clear? All of us had this question, no? They made 160 crore. They have spent only 130 crore. There was a surplus. Where is the money? Where is the money? Balance sheet is closed, right? So where is that money? For that, if you go deeper into the short-term sources and uses, you will understand their short-term source is 90 crore. Short-term usage is 120 crore. So 90 minus 120, it resulted in deficit of 30 crore. It means this 30 crore has actually flowed in along with this short-term sources because you cannot spend money negatively. No, if you want to spend, you need money. So this 30 crore got added with 90 crore. So they had 120 crore. And using that 120 crore only, they had spent on all this. But in statement form, we can put it like this. We can show they had a long-term surplus of 30 crore, and that surplus has been used for funding the deficit of 30 crore. So if you want to have more clarity, you can go behind this. Why they landed in deficit? Because their investment in short-term uses is 120 crore. The corresponding source is only 90 crore. So they landed in deficit. So how they manage this deficit? They manage this deficit because they had a long-term surplus of 30 crore. So look how beautifully it is communicating. Are you enjoying the beauty of this statement? The statement, the information which are not visible for naked eye in balance sheet. Okay. So this statement, the statement which gave us that beautiful clarity, is called as fund flow statement. I get romancham whenever I say this. I mean, I get goosebumps whenever I say this because it's such a beautiful statement which is going to act like a scan report or X-ray report. Okay, it's going to show you many things which literally the balance sheet and P&L cannot communicate on the face. Cash flow statement has got a definite purpose. Cash flow is a very powerful tool. It has lot many stories to communicate in one angle. Then fund flow statement has got lot many to communicate in another angle. That's the power and that's the beauty of fund flow statement. If you really enjoyed this part, okay, if you really enjoyed this part, just type I love fund flow statement, ILFS. Okay, this is not connected with ILFS company, which actually made a mess. And that mess is very visible and clear in fund flow statement because they basically diverted short-term funds for long-term purpose. Okay, that comes over there. Right. Okay, somebody asked me a question. I'm sorry, I missed it. Just a moment. Okay, Satyanarayan has a question. What it indicated? What is the, I mean, favor or what? That I will take you through in next. I mean, I have a case study to share with you. Yeah, Rachni, how to know something is wrong? You will understand that in our further discussion. Now, my agenda was to, first of all, introduce what is fund flow statement. Because once you get clarity on the purpose of the statement, then you will develop the ability to read the statement. Now you got the purpose of the statement to communicate what is the long-term funds, what is the long-term use, whether there is surplus or deficit, and how that surplus is handled. See here, you didn't find anything wrong because everything was good. Everything was good here. What do I mean by saying everything was good? They brought in 160 crore long-term funds and they've used only 130 crore long-term use. They had a surplus of 30 crore, which is good. And that surplus they have used for supporting their working capital. That is also good. Okay, so nothing is wrong here. So this fund flow statement has got nothing to reveal extra. But another fund flow statement can reveal more if there are misusages. Okay. So what do I mean by that? Let's try to understand through one example. Let me see whether that example is visible. I just copy pasted one case. Yeah, look at this. Yeah, look at this. There are three companies, A, B, C. See, this is basically the abridged format of balance sheet, not the fund flow statement, basically the abridged format of balance sheet. And look at this, there are three companies, A, B, C. They have long-term sources, short-term sources, long-term users, short-term users. Now, if I ask you which company is in trouble here, will you be able to answer? Actually, we can answer this through fund flow statement, And all of you have developed that ability now itself, right? See, here there is a long-term source. We should compare it with the long-term use. That's what fund flow statement taught us, right? Fund flow statement taught us something like this. Okay, I'll do one thing. I'll copy this page here. I'll put it next to our fund flow discussion. Yeah. Okay. What does fund flow statement taught us? You have to compare the long-term sources with long-term uses. So let's write it in that way. So we will know whether there is any surplus or deficit. Okay. Then we have to compare the short-term sources with short-term uses. Then we will know whether there are any surplus or deficit on the short-term front. Look at company A, long-term source is 50, long-term use is 50. Okay, this is long-term source, this is long-term use. So there is no surplus, no deficit. Look at the short-term source, that is 50, short-term use also 50. Okay, 50, 50. So here also no surplus, no deficit. Look at company B. Look at company B, their long-term source is 50, whereas long-term use is 70. Short-term source is 50, whereas short-term source is 30. So what is happening here? On the long-term front, the long-term source is 50, long-term use is 70. It means they have a deficit of 20. And on the short-term source, their source is larger than the use. It means they have surplus of 20. And if you look at company C, their long-term source is 50, long-term use is 30 only. It means they have positive 20. And if you look at the short-term front, their short-term source is 50, whereas short-term use is 70. So on the short-term front, they have a negative situation. I think company C is something similar to this company, yes or no? Company C is similar to this company. It means on the short-term front, they have a shortage. On the long-term front, they have a surplus. So that surplus has been used for supporting the shortage. Okay, so this is good. Company C is actually in comfortable situation because they have a surplus of 20 crore and on the short term side they have a deficit of 20 crore. So that surplus has been used for supporting this deficit. Okay. But the real problem is with company B. Why? Because company B, they have invested 70 crore in long-term use. And for that, the corresponding sources are long-term source of 50 crore, which is this, okay, and the surplus in short-term source, of 20 crore. This and this is really, really bad. I mean, not this, sorry, this. This is really, really bad. Why? Because this surplus in short-term source is a short-term money. Is a short-term money. Short-term money means what? It is repayable within a period of 1 year. So look, 50 crore has come from short-term source. If whoever have given the 50 crore, if they demand the entire repayment, then the money that will come for rescue will be only 30 crore. This remaining 20 crore will not come because it is not sitting in short-term use or short-term asset. Rather, it is gone for long-term use or long-term asset. Right? So this 20 crore, which has been used from short-term source for creating a long-term use is actually a disaster. I repeat once again. This company has created a long-term, let's say they have invested in land. They have invested 70 crore in land. And for that, the corresponding source is 50 crore of long-term money, maybe the term loan or capital, whatever. And the remaining 20 crore has basically flowed from here to here, right? They had a deficit and the deficit was managed by the surplus. So this 20 crore has actually come from which source? Short-term source. Short-term source. Short-term source means these are all the funds that have to be repaid within a period of 1 year. So this 20 crore I have given for purchasing the land. Now, whoever have given this 50 crore, if they demand the repayment, I will be in trouble. Why? Because for paying 50 crore, the resource available is only this 30 crore. What about the remaining 20 crore? It is not immediately available. It is not immediately available because this 20 crore had flowed for investing in this long-term asset. Yes or no? Are you able to understand? So if these guys demand the repayment, do you think this company will be able to repay? No, it is sitting in land. So you have to forcefully sell the land. And if you forcefully sell the land, you may not get this 20 crore. You will get amount less than 20 crore. If you get less than 20 crore, you are not making full payment. You are making partial payment. And if you are making only partial payment, they will not settle for that. They will demand full repayment. And if you are unable to make full repayment, then you are going to land in big trouble. Are you getting me? So this is the reason I said this situation is a risky situation or it's a troublesome situation. Okay. And how you are getting this picture? You are getting this picture literally from fund flow statement. Because this is fund flow statement, no? Because I told you fund flow statement will show you long-term sources, uses. It will show you whether there are surplus or deficit. And here you see the long-term source and use when you compared, you have noticed there is a deficit. If there is a deficit on the long-term front, if there is a deficit on the long-term front, then it is a trouble. It is a trouble. Why? Because who funded this deficit? Who funded this deficit? In long term, you are not supposed to have deficit. In long term, you are not supposed to have deficit. In long term, good companies, professionally managed companies will have only surplus. If there is a deficit in long term front, then it means either the business is making loss or it means business don't have the financial discipline of ensuring long-term funds should be used only for long-term purpose and short-term funds should be used only for short-term purpose. Here, they have made investment in long-term uses, not using the long-term source, but using a short-term source, which is a sheer indiscipline, financial indiscipline. Okay. The companies which are committing this mistake will not survive for a longer period, will not survive. 95% of the businesses are actually failing because of the financial mismanagement. And if you go deeper into the root cause of the financial mismanagement, it is mainly diversion of short-term funds for long-term purpose. Several businesses collapse because of this reason. It is highly challenging to come out of this situation. If at all they come, it means they have God's grace or they are lucky enough to survive a disaster. Okay, so look, understand. If this business is not in a position to pay this 20 crore, let's say they are able to sell the land and get some only 15 crore, it means still another 5 crore will be pending. And whoever have given this money to recover that 5 crore, they will go to any extreme legally. Okay, so that could be the kind of consequences that can arise when the funds are used like this, and that will get caught easily or that will get revealed easily in fund flow statement. So imagine this is the fund flow statement. Then imagine the situation which I explained in the beginning, okay, where the paper came to me flying. Okay, it had such a kind of diversion. I was a beginner at the time. I didn't have much of clarity on fund flow statement. I presented the proposal where it was very clear there was a diversion of fund in the last year, which was around like 15 to 20 crore. So when they had diversion and they're coming for an additional credit facility, banks had nothing doing, literally fired. Okay, I mean, that loan was not at all sanctioned. It was a new company. I mean, existing unit, but a new customer, trying to be a new customer, but the loan got rejected because of this financial indiscipline. If they don't have this financial discipline, then they will not demonstrate that even with the credit facilities availed with the bank. So that was a stand taken by my sanctioning authority at the time and they rejected. Okay. So that's what you get to know through fund flow statement. Here, the long-term source is greater than use, so you have a surplus. So everything was good. But if the long-term source is less than the long-term use, and here if you're going to have a negative figure, then it means some diversion have taken place or it could mean the business is running into losses. So only two reasons. And in those cases, you have to take decision on case-to-case basis only. So now are you getting? So whoever asked me, what is the inference? What decision you are able to take? The decision what I'm able to take is I'm able to understand on financial discipline of the borrower. I also have one more case where I can take you into their financial decision making process, financial or strategic financial decision making. Okay. So now just tell me, are you able to really understand the use of fund flow analysis? This analysis helped us to take a decision whether this business is in trouble, whether any credit facilities can be given to this company or not. Got it? Yeah. Now, let me take you through this case, a very standard case. Okay, all of you listen. Now, let me give you two information, digest this. For the purpose of fund flow statement, these two things are considered as long-term uses. What are those two things? One is payment of taxes. The other one is payment of dividends. These two are considered as long-term use of funds. Why? Because these are basically share of profits. Okay. Profits are basically the money that goes into reserves and surplus. If you recollect, we discussed that here, right? Here, if you recollect, we said retained profits is a long-term source, right? Retained profit is a long-term source. It means profit is a long-term source, right? So if profit is a long-term source, then any distribution that is happening out of the profit, any distribution of profit, say in the form of taxes, in the form of dividends, that should be considered as long-term use. That should be considered as long-term use. Is that logic okay? Is that logic okay? We all agreed profit retained is a long-term source. Okay? We all agreed profit is a long-term source because it is payable for the owners. So we call it as long-term source. So any usage of the profit, let's say in the form of taxes, in the form of dividend, should be construed as long-term use for the limited purpose of fund flow statement. For the limited purpose of fund flow statement. Okay. Now with this understanding, let's try to solve this particular case. And let's get ready to admire the beauty of the fund flow statement once again. Look at here. This business has made funds from operation 5,140. This is nothing but profits made by the business after doing certain technical adjustment. You need not worry about those technical adjustments. That is taken care by accountants. You don't worry. You understand that this is the profit they have made in the year 2023. Okay. And this profit is considered as what? Long-term source, LTS. As I explained here, this profit is long-term source. Okay. And they have sold some investments also. See, if purchase of investment is a long-term use, I mean, if purchase of asset and investments are long-term use, then sale of it should be considered as long-term source. Agreed or not? Agreed or not? If purchase of long-term assets is long-term use, that is money is going out, then the sale of it should be considered as long-term use. Okay. So on that logic, we are also bringing the sale of investment under long-term source. So this is also a long-term source. So in 2023, if you see their total long-term source is 5,650. The figures are in thousands or lakhs. Okay. Now, what they did, they have used this money for three different purposes. They've used this money for purchasing plant and machinery, paying taxes, paying dividend. So now position yourself as the finance manager or this particular business owner. You have long-term funds of 5,650. If you are going to use this money, where you will use this money first? Whether you will use this money first for paying taxes or dividend or purchasing plant and machinery. Just type purchase of plant and machinery. If that is your core objective, okay, you can mention that. Tax is also very important. You cannot escape taxes. You cannot avoid taxes. So tax is also very important. Okay. So right. Now, based on the responses received, what I understand is paying taxes is very important. You have to pay 1,100. And let's say you want to purchase plant and machinery because you have some expansion ideas. You go and factor that also. So from 5,650, if you pay off this 1,100 and if you pay off this 3,700, you will be left with 850 of long-term surplus. You will be left with 850. When they are left with 850, you look what they have done. They have paid dividend. They have paid dividend of 1,400. Do they really have adequate source to pay dividend of 1,400? Do they really have adequate source? Just say so. They have only 850. With 850, they have paid 1,400. So 850 minus 1,400 means they have paid 550 extra, the money which they don't have on hand. They don't have this money. They don't have on hand. So what they did, they checked on their short-term side. So on their short-term side, they had some short-term sources. They have lesser short-term uses and they had a surplus of 550. And that surplus they have used for paying dividend. Do you think this is the right approach or a strategic approach? This surplus of 550 may be the money payable to some supplier, may be the money payable to banker, may be the advance received from the customer. Do you think what the company has done here is right? Answer is no, right? So if you look at it in this angle, this is wrong. So what ideally this company could have done in this situation? When they are having only 850, what they could have done is they could have restricted their dividend distribution to 850, right? If they had done that, they would not have landed in deficit. It would have been a matching situation. Okay. But let's say they are very particular, they will pay dividend of 1,400 because they have created a trend or expectation. The owners are going to expect a certain level like this, then they should have reworked in this model. That is 5,650, okay, is the long-term source. Let them pay the dividend of, sorry, tax of 1,100. And in the place of plant and machinery, let them pay dividend. That is 1,400. That is after paying tax of 1,100 out of 5,650, they would have had 4,550, right? 5,650 minus 1,100, they would have had 4,550. From that, let them pay dividend of 1,400. They would have landed in surplus of 3,150. So when they had 3,150, what they did, they went and purchased plant and machinery of 3,700. So here also what they did, they landed in a deficit of 550. And how they manage the deficit? They took these short-term funds and they used it for long-term use. So now tell me whether this approach is correct. Whether this approach is correct? Yes or no? This approach is also wrong. See, you are getting all this clarity from fund flow statement. You will not get this clarity by looking at the balance sheet. You will not get this clarity by looking at the cash flow statement. You will get this kind of clarity only by looking at the fund flow statement. You will get to know the financial decision making process, thought process of the company itself by looking at the fund flow statement. They had multiple alternatives, no? They could have either done like this or they could have either done like that. Or here, see, when they are left with 3,150, what motivated them to go for 3,700? Maybe the answer is the cost of the machinery is 3,700. You cannot buy it on piecemeal basis. Part by part, it is not possible. Okay. So if that is the requirement, what they should have ideally done, they should have made efforts to increase their long-term sources. Now the long-term source is 5,650, right? They should have taken effort to add another 550 in long-term source. Yes or no? They should have taken effort. They could have brought this 550 either from a debt, maybe a term loan, or the owners could have infused the equity. If that had happened, the total long-term source would have been 550 plus 5,650. The total long-term source would have been 6,200. From that, 1,100 is paid for taxes. So they will have 5,100. They can pay dividend of 1,400. They will have surplus of 3,700. And with that, they can meet investment in plant and machinery, and they will not land in any surplus or deficit situation. They have not done that. So it shows what they could have done, what they did, everything comes to light. And this is what your top bosses read. And this is the reason the proposal came to me flying from here to here. Why? Because I didn't do these analysis. If I had done these analysis, I would have questioned the customer and the proposal would have got rejected at screening stage itself. We didn't do this analysis, but our top bosses, that's why we call them as boss, no? They know where to catch. And they did that. Okay, so here, all these things could have been done, and your sanctioning authorities could question this if they are really knowledgeable. They will question you in this angle, why they did like this, why they didn't do like that, because you are expected to analyze and ask these questions to the borrowers also. Okay, so look, either they could have restricted their dividend, which they didn't do, or they could have raised additional money in the form of debt or equity. They didn't do. And because of all these reasons, they committed the sin of committing or diverting the short-term funds for long-term use. This is what happened in 2024. 2024. Do I have your permission for another 10 minutes so I can also discuss about 2024? I mean, this is what happened in 2023. Do I have your permission so I can discuss about 2024 also? Another 10 to 15 minutes, maybe 10 minutes maximum. Yeah. Let's see what happened in 2024. Okay. In 2024, their long-term source has increased. Number one, the profits itself has increased and they raised some debt also. Maybe because of the lesson or the mistake they committed in the last year. The last year they diverted 550. Maybe to compensate that, it seems like they have raised some 500. So the total long-term source is like 7,800. Okay. Now tell me how they should use this money, where they should put their money first. Please answer where they should put their money first. Okay, Kumar is saying let them pay taxes first. Okay, let's pay because that is the real thing. So 7,800 minus 1,700. If they pay tax, the leftover will be like 6,100. That is a lot of money. Okay. Then, okay, if they are very particular about paying dividend, let them pay dividend, let them pay for plant and machinery. Okay. Because these two are very important. Investing in plant and machinery means they are focusing on the future, and paying dividend means they are taking care of owners, they are giving reward. Okay, I think money is available to take care of that also. So plant and machinery investment is like 1,005, I mean 2,775. So 6,100 minus 2,775, they have 3,325. And dividend is only 2,250. So minus 2,250, it means they still have a surplus of 1,075. And I think at this point only they gone mad. At this point only they gone mad. When they had surplus, they could have ideally reserved this surplus for supporting the day-to-day operation. But what they did at this point, they went and made some investment. Investment means it is outside the company, not within the company, outside the company. And what is the money they have invested? It is 1,500. They've invested 1,500 when they are having only 1,075. So they landed in a shortage of 425. Yes or no? They landed in a shortage of 425. So in this case, the only mistake what they have committed is the investment. The only mistake what they have committed is investment. See, when you don't have, how can you invest? You cannot invest by taking the money which are payable to the supplier. They are supposed to be paid in that short period. 30 days means you have to pay them in 30 days. You cannot take bank cash credit fund and invest in some other company stocks or, shares or bonds or debentures. You cannot do that. But here they have committed that sin. They have used the short-term surplus for handling or taking care of this long-term deficit, which is a bad decision, Maybe last year they had deficit and they continued their operations in 2024. So you may have a question, what's a big deal here? Here they had deficit, but this company didn't get closed. They are running their show. In 2024 also they are running their show. In 2024 also there is a deficit. And if they keep committing this mistake, then at one point the bubble will burst. At one point the bubble will burst. That's how big companies will come crashing down, crashing down. And these things will get caught or will get revealed in fund flow statement. So I think it's like some kind of arrangement. I don't know why they restricted or why they have withdrawn the fund flow statement in the financial statements. Such a powerful statement. It communicates a lot many stories, because balance sheet, P&L and all, you have to use the information, corroborate, you have to relate, only then you can make anything out of it. But this is one statement which will communicate a lot many things, their decision-making strategies, their strategic financial management, whether they are making financial mismanagement, whether they are diverting, whether they are smart in their investment decision, everything will come into light when you read this fund flow statement. But banks have not given up this fund flow statement. Big cases, especially if you are going to handle big ticket loans, say even from SME like 5 crore, 10 crore onwards, they are going to go through this fund flow statement. They are going through this fund flow statement. They are taking critical sanction related decisions. Whether you go through or not, your bosses, your top bosses will go through. And they will use fund flow statement as a precautionary tool, especially if they want to avoid certain borrowers. They'll use fund flow statement, because fund flow statement will give you the picture in much deeper sense with significant clarity. Okay, so that's the very purpose of fund flow statement. So how many of you have got that clarity today? The essence of fund flow statement, the essence of fund flow analysis, and how many of you really admire this fund flow statement? How many of you are really impressed with the fund flow statement? If you're really impressed with the fund flow statement, just type impressed or whatever that comes to your mind. If you find today's session useful, valuable, powerful, something relevant, something important, whatever that comes to your mind, just comment that, And I just need the permission of our diamond members to introduce our diamond membership. So if any diamond members are here, just type diamond permitted. Just type diamond permitted. With your permission, I'll introduce our Diamond Live membership to other aspiring learners, so they can also have lifelong learning opportunity like what you have. Yes, I got the permission from Devanand, Shakti Kumaran, Divya Nair. Yes, thank you so much. So with your permission, let me quickly introduce what is a Diamond membership. Yeah, we have a membership program called Diamond Live membership. This membership program will give you access to 130 plus pre-recorded online courses, which we have published in the domains of banking, credit, finance, accounting, costing, and so on. This membership program will give you access to 100 plus ebooks which we have published in this domain. This membership program will also give you access to all the live classes which we have conducted in the past. This membership program will also give you access to all the live classes which we will be conducting in future as well. This membership program will also give you access to the latest developments that are happening in the world of banking and finance through our conversational articles, which we are releasing on a daily basis. This membership program will also give you access to, or let me put it like this, this membership program will give you assurance of free access, to all the future publications, to all our future publications. So it can be in the form of courses, it can be in the form of ebooks, it can be templates, it can be test series, it can be short lessons. So whatever we release in e-format, you will get access to all this. And this is what our existing Diamond members have access to. And we have more than 600 plus Diamond members, and majority of them upgraded to Diamond membership in the past 2 months itself. And even today, we have more than 10 plus learners upgraded to Diamond membership after attending our morning and noon session. And now I'm going to open up the window for you to upgrade to Diamond Live membership. So the question is how to upgrade, how to get all this. For that, please open your WhatsApp and send a message to this number right now, 90251 00249. I repeat, 90251 00249. You just have to send me a message called Sunday Diamond in your WhatsApp. If you send me a message, you will get a surprisingly unimaginable offer for Diamond membership. And whoever watching this in your mobile, I'm going to give you a link. Okay, I'm going to give you a link. Just check the chat box. I've sent you a link. If you click that link, it will automatically open your WhatsApp with the message Sunday Diamond to the number I mentioned. You just have to send it. If you do so, you will get a special offer. And already many members have upgraded, and I'm opening the window for you right now. So click the link, send the generated message, and wait for the offer. If you have already enrolled in any of our courses, I repeat, if you have already enrolled in any of our courses, you will get additional discount as well. So click the link, send the generated message, and I'm here to give you the special offer. Let's get started. Yes, already I received messages from 4 members. Yeah, here we go. If you have already enrolled in any of our courses, please mention that so you will get additional special discount as well. And here we go. I will be sending you 2 messages. One, the normal offer price message, and 2, additional discount message. Okay. And this offer is available now till I conclude the session. Whoever interested in this Diamond membership, one thing be very clear, go for this Diamond membership only if you're serious about your career growth. Because those who are serious about career growth will be ready to spend some time on learning and upskilling. Only for them, I will recommend this Diamond membership. Okay.